Lata, I request you to take over the proceedings and explain the format of the discussion. Thank you.
Thank you very much, Aditi. Welcome to everybody to this CNBC TV 18 and BankBazaar event on digital finance and its way forward. Its way forward, especially in making it paperless, making financial transactions of all kinds paperless. We have with us Nandan Nilekani. You were introduced as the founder of Infosys. Actually, he's the founding father of UIDAI itself, Aadhaar itself in India, as well as, to some extent, the mentor for financial digitization in India. I didn't mean to make you sound old, but has fathered this entire process of digitization of finance in India. In a minute, we will also invite Amit Agarwal to speak. He's the person who represents operationalizing of digitization of finance for e-commerce purposes. Since he's the person who is at the cutting edge or perhaps first off the block in digitizing finance, we thought they represent, one, the vision, and two, the operationalization of digitization of finance. So without much ado, first the vision. Nandan, if you can tell us how you see the vision forward. Yes, as you please.
Thank you, Lata, and it's really wonderful to be here at this event on digital finance, and thanks to BankBazaar for organizing this. I thought I'll briefly spell out what's happening and what we think will happen going forward. I mean, I think this whole journey began 7 years back, and it was a huge coincidence that two institutions were born at the same time, the NPCI and the UIDAI. UIDAI was formed by the government to give everybody a unique ID, and I was invited to lead that effort. But one day I got a call from Mr. M.V. Nair, who at that time was chairman of the IBA, saying, we are setting up this thing called NPCI. So I said, what's that? So he said, with these payments and all this stuff. So I said, that sounds like a good thing because, you know, maybe there's a synergy there. And then I got a call from RBI Deputy Governor, and she asked me, she said, I think this is great because identity and banking go together very well. So I think all these things came together, and we spent the first 4 or 5 years of this journey building the infrastructure. And you know, now the billion people have the Aadhaar number, phones are becoming very popular, smartphones. And the banking system is both rolling out massive amount of financial inclusion through the Jan Dhan program, as well as, of course, with the new banks coming up. So I think we are creating an environment which is known as JAM, Jan Dhan Aadhaar Mobile, which means everybody in India will have a bank account of some kind, an Aadhaar number, and a phone with them. And that becomes the basic platform on which we can do things. I think in the first phase of this journey was really getting government to adopt Aadhaar and DBT. So NPCI and UIDAI worked together to build the Aadhaar payment bridge, which is the basic route by which money is getting credited into bank accounts of beneficiaries. And today this bridge has about 340 million customers linked to Aadhaar numbers. That means 34 crore people have an Aadhaar-linked bank account, which is extraordinary that there are so many people linked. And that platform has done over 1 billion transactions, running into several $1 billion, you know, 30,000-40,000 crores of transactions. So that established the link between Aadhaar, the financial system, and the ability to credit money directly into bank accounts. And that is the world's largest cash transfer system, just that one system. And then I think as we reached a point where we had sort of built the Aadhaar authentication, the eKYC started becoming popular, and we're very fortunate that eKYC has been accepted by all the regulators of India. So RBI, SEBI, IRDA, PFRDA, and TRAI and DOT have all accepted eKYC. So for the first time, we have a single eKYC across all our regulators. And that itself is a huge opportunity for, you know, using the KYC in a common way. Of course, in some cases, the requirement of the eKYC can be done either with a biometric authentication or OTP. And currently for bank account opening, it's limited to biometric. But I'm sure as people realize that even the OTP is such a powerful way of doing things, I'm sure the regulators will look at allowing OTP-based eKYC in the banking sector. So I hope it's just a matter of time. So the eKYC became very popular, and today I think we've done about 150 million eKYCs across all sectors. I mean, those of you who have seen the, all the banks are using eKYC. Now all the mobile companies are using eKYC. You can get a SIM card from Jio in 15 minutes with Aadhaar. And all the three operators, Airtel, Vodafone, Idea, are launching eKYC very soon. So that whole thing has now taken off. But what was interesting was that apart from Aadhaar authentication and eKYC, sometime in 2014, when Mr. Ram Sevak Sharma, who was my colleague and sort of my partner in this whole Aadhaar thing, he was the founding CEO. He was the IT secretary, and he worked with people who had worked on the Aadhaar system like Pramod Verma and designed e-sign. So using Aadhaar now you can do a digital signature of a document, and they got it notified under the IT Act, and the CCA was given the task of having more e-sign providers. So e-sign is something which we talked about, and that's very important because in financial applications, if you can sign the document on the phone using your Aadhaar number, then that makes the digital document signed, encrypted, paperless, and it can go somewhere else. And the other major thing which was designed was the digital locker, which was a system to essentially store all these documents electronically. And the government launched something called a DigiLocker, which is the government's locker, which today has 17 databases, including the entire driver's license database and the car registration. So today, technically on your phone, you can do a call to that database and get your driver's license on your phone. So that's the kind of power of locker. But what's good is that two other things have happened in the last few weeks. One is the RBI has come forward and issued the guidelines for the account aggregator guidelines, which allows you to create account aggregation, and they've defined the rules of how data can be brought from different sources and so on. And these guidelines are not just for RBI, they're for RBI, SEBI, IRDA, and PFRDA, because done on behalf of all the financial regulators. And just last week, the IT Ministry has issued the guidelines for digital locker specifications for a multi-locker system. In other words, now any number of people can apply and become digital lockers, and that will be, again, the certifying authority for that will be the CCA, just like it is for e-sign. So imagine there'll be 5 or 10 locker providers for financial records, another 5 or 10 locker providers for health records, another 5 or 10 health providers for degree certificates. So there'll be a whole market mechanism where multiple people will provide these locker capabilities, but all of it will be interoperable, portable, all the good stuff that we like in these systems. So we think that eKYC, which allows you to do a KYC of a person whenever they buy a product, e-sign, which allows you to sign a document using an Aadhaar number, and digital locker, all these three put together create the completely paperless system that we're talking about today. And all this is it's happening imminently across all these various systems. And I think once we reach that point, I think it's going to be a huge driver for inclusion. And of course, the other big thing which has happened is that the banks got together at NPCI and created this wonderful system of UPI. And I think that's rolling out very quickly. And I think it's going to be the heart of, driving transactions, mobile to mobile, and that we have this concept of a virtual payment address. So you can use any, like an email ID, you can send and receive money, you can do call and collect transactions. You can do two-factor authentication very simply with the phone as one factor and the PIN as a second factor. And once the Aadhaar biometric authentication becomes available on the phone, which I think is about 6 to 9 months away, you can do single-click two-factor authentication on your phone using your Aadhaar number and your phone. So we're talking about really this is not there anywhere else in the world. This is really path-breaking stuff. So I think we are on the verge of all these things coming together. And I see this evolution in 3 phases. In the first phase was the government usage of Aadhaar, DBT to make government processes more efficient and more effective and reduce wastage. And already the government has saved billions of dollars from the $1 billion investment in the Aadhaar platform. The second stage is regulators encouraging the adoption of these things. And the final stage is open innovation happening on using this KYC, this whole paperless, presence-less, cashless kind of environment. So I think we are really looking at a huge innovation, and now it's really gaining global appreciation. Every week we get a visit from some country who wants to sort of create a similar thing, and we call this whole thing the paperless, presence-less, cashless thing of the India stack. So there's huge amount of global interest in that. The World Bank now has a group working on ID for development for the whole world. United Nations has declared that one of the Sustainable Development Goals for 2030 is legal identity for all. So I think the revolution that began here for ID is now going global as people are beginning to realize that this infrastructure is coming. And I think particularly in India, I think many things have come together. There's of course the government push to increase financial inclusion, and Jan Dhan is a great example of that. There's the regulators push to increase competition, and the whole small bank, payment bank is part of that. Then the effort by the banks and NPCI to create the whole payment infrastructure. Then, the things happening in telecom sector where new companies are coming. So in all this, there's a crucible of things happening, and we are going to see some very exciting things. And I think fundamentally, the most important thing will be how do we make sure that billion Indians get access to affordable credit, which is going to happen. Because tomorrow's credit is going to come not from collateral-based lending, but flow-based lending. Because as you have digital footprints of everyone, then you can use those digital footprints to decide the creditworthiness and apply algorithms to that. And that, I think, is coming soon. And that will allow a whole class of people who have been outside the formal financial system to get access to credit in an affordable manner. So I think we are really seeing a lot of very, very exciting things. And I believe that we are really on the verge of great things happening. And the important thing is that everything here is a public infrastructure. The entire stack. Aadhaar is a government system. Aadhaar authentication is provided by UIDAI. Aadhaar eKYC is also provided by UIDAI. The e-sign is provided by CCA, licensing many people to provide e-sign. The same thing with lockers. UPI is provided by NPCI, which is a non-profit company owned by the banks. And then, of course, the whole locker system, the whole consent-based architecture is being notified by RBI on behalf of the financial regulators and by the government of India. So this is a very rare situation where the entire digital infrastructure for finance at scale, speed, and low cost is really a public infrastructure. It can be used by everybody, and it's not proprietary to a company. It's not a choke point that has happened in other parts of the world where a couple of companies own the payment rails and then, they sort of become the bottlenecks. Here we have an open model which any bank in the country can use to offer financial services. And then it's up to the banks working with their technology providers to build more and more innovations on top of this platform. So I think this is a very unusual situation we have. And I'm confident that we are only seeing the beginning of adoption of all these things. Because whenever a technology is developed, it takes several years often to get adopted. If you think of the internet was invented in 1983. The first TCP/IP protocol was in 1983. But the first use of it from an innovation sense was Netscape in 1995. So it took 12 years from the internet being built as a technical infrastructure and the use for Netscape, and then your Netscape, Amazon, and Google, and Facebook, and all that. So basically, it took 12 years to go from a government infrastructure to infrastructure for innovation. Similarly, GPS was built, 30 years back. It was only in 2000 that GPS was made into a commercially available infrastructure, and took another 5-10 years for maps and, Uber and driverless cars, another 10 years. So, it's one thing to build infrastructure for this, but another thing to get it adopted. In fact, in India, the rate of adoption of these new technologies is much, much faster than elsewhere because lots of these competitive things are also happening. So I think, to sum it all, I think this is a wonderful idea to have this paperless finance conference. I think we often tend to underestimate the role of paperless finance in inclusion. Because what we are really doing is we are making distribution simple through the phone, and we're making transactions instant on the phone, which means that a lot more people will have instant access to finance than ever before. So also the whole paperless approach is also a massive inclusion drive that is going on. And in some sense, you can think that for the first time, markets and social inclusion are coming together. Because markets tend to concentrate on only profitable customers, and social programs try to reach people who are to be included. But if the cost of delivering products and the cost of discovery of products becomes zero, then everybody, 1 billion people can access financial products. So in some sense, market force and social goals are coming together with all this paperless stuff. So it's not just some technology stuff. It's really about how to bring market goals and social goals together. And that's what I think we're achieving. So I think this is wonderful, and let me congratulate CNBC for having this event, and of course, BankBazaar for sponsoring. I see a lot of the leaders of the banking sector here, Standard Chartered, Axis Rajiv, Mr. Rajnish Kumar from SBI, Mr. Hota, of course, and many people here, my friend Vaidyanathan, who I knew from his ICICI Bank days. So, lots of people here who have worked on this whole thing, and I'm confident that you're just seeing the beginning of a fantastic revolution in Indian finance. Thank you very much.
Well, I didn't want to take time to design the format, but I must tell you that Nandan will be available for questions in a minute. We will have the next keynote speaker, Amit Agarwal, speak to us on how he has been able to operationalize e-commerce with the help of digitization of finance. And thereafter, we will be both open to questions, and we won't let Nandan go away. There is a very elite bankers panel. All the names that you just mentioned, Rajiv, Arvind of HDFC, Mr. Rajnish Kumar of SBI, Zareen Darwal of Standard Chartered, they will all be here. And then there is a non-bankers panel where we will have Mr. Bhargav Das Gupta, Mr. Sathe, the independent member from IRDA, and several other experts to take questions, to discuss the problems and the prospects for paperless financial products dissemination for the non-banking sector as well. And we will hope, of course, that Amit and Nandan will stay through and take questions and give advice to that segment as well. But before that, Amit Agarwal, your turn to tell us how you've operationalized digitization in e-commerce.
So thank you for inviting me. Very different audience and occasion for me, but I'm happy to share some of the learnings from e-commerce that I do see there's a parallel when I think of the financial services industry. So bear with me. The first half of my 10 slides might sound out of place, but I'll try to connect it back. So I have some slides.
No, it is not out of place. Sorry to interrupt. It's because we want to learn from your experience.
Very excited. So I'm going to start with one slide that would really seem out of place, which is this picture. This picture is the shadow of Venus crossing the sun. And this is taken from June 2012. And the exciting thing about this picture is that none of us in this room will ever see it again. This happens once in 125 years. And it happens in pairs. So it happens in pairs of 8 years. So it happened in 2004 and then 2012. And the next time it would happen is after 125 years. And I found this picture on the internet and I found it very exciting because I thought, when I think about e-commerce, and Nandan talked about the social and corporate goals together, I think we are seeing something of that kind in India. I often joke that there was a freedom struggle, there was the mobile phone, and now the mobile internet. I've never seen the country so united on one single platform, across all diversity that you can imagine. And that's what's happening. It's massive because retail is a very, very large industry. It's inclusive. It's going to touch every single person, every business, every consumer in India. It's going to be leapfrog. It's going to make the traditional path non-essential. It's going to be time compressed. So the inflection points are going to zoom past us and we may not notice it. And it's going to be never seen before. So that's how I think about e-commerce. That's what I've experienced e-commerce happen when it happened in the US. And then I thought, okay, let's get back to reality. And I looked at what just happened in the first week of October. So this is very recent. And I thought I'll share some findings from you. We just did our first, Diwali festive sale in October. And I was looking at the metrics with my team. And there were a few metrics that they shared which were just mind-boggling for me. So one of the metrics they shared was in 120 hours of that sale, the 5 days, Amazon.in received at least one order from 90% of India's serviceable PIN codes. And I thought that kind of inclusion was just mind-boggling. Like I never even imagined, even though it's very exciting, but I thought in 3 years, it's been 36 months, that you could get orders from 90% of India's serviceable PIN codes. It's not even visits, these are people placing orders. So that was number one. Number two, the spread of items that people bought ranged everything from your usual suspects of a mobile phone or a TV, all the way to pet supplies and sports equipment and fashion and so on. And for those of you following the news, even Hing and Churan that I've been now famous for, even my mom is calling me. So I think I genuinely feel that, you know, as I said before, this month, if we flash forward after 10 years, will be recognized as one of the inflection points for e-commerce in India. Because what I just talked to you about, the mental model, if you go back 3 months ago, a popular mental model would have been, it's a discount-led phenomena, mostly limited to mobile phones or consumer electronics, a prerogative of some of the more well-to-do people in metros, and people will never pay for convenience. And what you saw was the penetration I talked about, the spread of the items. Another metric that we saw was the number of prime shipments. These are shipments that people pay for to get fast. And the Prime membership was a top seller in those 5 days. So shows that people start valuing convenience. So when you remove friction, I've always felt that people do more of what you make it easy to do. And so we are seeing that. So I think that inflection point is coming, and that might be something that's important for the financial services industry. And as I said, it took only 3 years. More than 120,000 sellers. These are mostly SMBs. These are sellers who have never seen organized retail. We have 12,500 Kirana stores who are delivering items, who used to do STD booths before. So strange entrepreneurs getting into the ecosystem, doing things that they've never done before in a self-service manner. Sellers can come on Amazon, sign up, start selling. In fact, we had the chai cart, Amazon Tatkal, where you can start selling in 60 minutes. You have a program called I Have Space that any corner store can sign up to be an Amazon delivery network. So a lot of these things are happening, and I thought maybe there is some parallel to learn from for the financial services industry. So I asked my question, what drove this? You know, at Amazon, at least we ask ourselves, the answer to this question should be 2 or 3, not more than that, controllable inputs that you can control essentially. And those are invariant over time and invariant over space. That's kind of the answer we always look for. So what do I mean by that is things that, you know, would never change. If I ask you 20 years later, the answer would be the same. If you change the location, the answer would be the same. And those would be things that you can control. And the answer to that, to the question, I think what drove this in 3 years is this. This is an actual napkin drawing by Jeff Bezos. It's his drawing, which was done about 20 years ago. And he created this, what we call as the Amazon flywheel. And it basically says, start with the customer experience. So remove friction, make things easy. We're talking about paperless today. Start with the customer experience. When you do that, you get traffic. Traffic is nothing but adoption. When you get adoption, you get sellers. In e-commerce case, it would be different financial services. When you get sellers, you get more selection. When you get more selection, you get better customer experience. And when this starts spinning, as Nandan said, it takes a little bit of time. It requires patience and innovation. You get lower cost structure for the whole ecosystem that drives lower prices, and you get better customer experience. So this has worked well for us for 20 plus years, and it was worked for us in the last 3 years at India. And I think the controllable inputs that we believe is simply add more selection, make things competitively priced, and make things faster. That's it. So, you know, my team only focuses on 3 metrics, and our business is very simple. We don't worry about what things are different. We ask ourselves what is same. And so you can invest your energy on things that are same for many, many decades, rather than change your strategy every year on things that are different. So I thought, you know, can I have some parallel for the topic that we're talking about? And I drew my own little napkin drawing. It would never go in the records as anything important, but I said, you know, maybe if we focus on customer experience, frictionless payments. I picked frictionless payments because that's very dear to e-commerce, but it would be paperless in case of the broader context. As an example of convenience, you would get a lot of usage because people hate friction. You know, how many of you like friction? If you ask yourself 20 years later and I said, can I give you less selection at higher prices and deliver slowly? You would laugh at me. So you know that those things matter. So similarly, that would drive usage. When you drive usage, there would be merchants that would adopt it. It would drive more use cases, and that would further improve customer experience. And if this spun fast enough, you will have lower cost of payments. There's enough inefficiency in the system that could be driven out, which will create value, whether it's rewards or points or whatever that is, and it will drive better customer experience. And the interesting part is both of these flywheels work well together. I feel that what we have managed to do, Amazon has managed to do in 3 years, and overall e-commerce maybe might be a good springboard for us to partner and figure out how we can help this overall objective, because both are centered around customer experience. And when you look at the sellers and you look at the merchants, the inclusion is, cannot be neglected. When you look at the consumers involved, cannot be neglected, and both work very tightly with each other. So I'll leave you with that thought. I think there's a lot of synergy to drive it. You need the network effect to happen. Some ideas that come to my mind are, remove friction. For example, just the act of payments requires OTP, requires two-factor authentication. How do you remove friction so that people use it more? Inclusion, as I said, connecting these different networks. And data and insights is a big asset that could be combined to remove friction and create more value. I'll end with the thought, this is still day one. I should actually say it's probably minute one of day one, at least for Amazon in India and for e-commerce, and especially for this topic. So very excited. Thank you, and very glad to be here.
Well, let me start with the question answer session, but let me assure you that more questions will come from the audience who want to learn from your experience and who will have a zillion questions for Nandan. First of all, thank you, both of you, first for laying out the infrastructure, Nandan, and for giving us the thought that with this infrastructure, the sky is the limit in terms of the growth of digitization of finance, and Amit, for that very scintillating presentation, starting from that Eclipse presentation and then going on to tell us how you saw the growth of e-commerce orders this festive season itself. So thank you very much, and let me start with my first question. Well, Nandan, how soon do you see this escalating into a lot of sale of financial products in the banking space itself? For instance, for small value ticket loans, we don't have any financial profiling yet, and therefore, at what point do you see that escalating exponentially? For large value loans, even now, a banker wants to do due diligence, for which he needs wet signatures. So both large and small have their own problems. When do you see, and how do you see this getting overcome?
Actually, large loans have bigger problems. Just joking.
Very large loans have very large problems, yes.
So let me focus on the small loans, because that's what is real. I think one thing we need to recognize is that India is going from being data poor to data rich. What that means is that the very act of somebody migrating from a feature phone to a smartphone creates a 30x or 40x increase in the data footprint that he creates, because he has sensors and GPS and all kinds of things on his phone. And therefore, as more people migrate to smartphones, automatically they become data rich. And then all the other digital platforms that are coming will also make things data rich. So UPI will have a trail of all your payments, in the sense your personal trail. When the Bharat bill payment system, which NPCI is implementing in the next 6 months, all the bill payments will have a digital trail. When the electronic toll system is again being done, and already I think 4 banks, Axis, SBI, IDFC and ICICI, I think, are on that platform, and I'm sure more banks will come. Imagine that every truck drives to every toll gate will do automatic debit to a bank account. So that's going to create a trail of payments. Then when the GSTN comes, the GSTN is going to generate 3 to 5 billion invoices a month by 7 million businesses. And all those invoice detail at a line item level will be electronically transmitted to the GST hub. So imagine that every business in the country, every tax it pays for indirect taxes, that data is on that thing. Now what happens is, whether I'm a consumer or a business, I can say, I want to use my data to get a loan. So I will go to a loan marketplace and basically say, I'm a consumer, I want a loan of 70,000 rupees. I will authorize UPI to give my payment details. I'll authorize income tax to give my tax details. Authorize my bank to give my bank statement. I'll authorize my mobile phone to give my mobile phone details, whatever. And I'll send that loan request to a marketplace. I will get this data from these various, this is my data, this is my data. I'll get them from databases using consent. and I'll send them to a marketplace, and that marketplace will have multiple lenders, and they will have their own data analysis and algorithms, and they'll make different offers. Somebody will offer a different rate or whatever, and then you can choose the loan. So this is going to happen. Same thing will happen for small business. If a small business wants a loan, he will go to a lender and say, look at my invoice details. I've done so much business. These are the details. These are the shipments. And on that basis, the lender will give a loan. So the notion that India will become data rich, and that data is data rich by consumers and businesses, and that data is available on tap for me to ask for a loan, is a whole new idea. And that is going to drive massive lending. I think the whole lending we're going to see in the next 10 years, and it's not bubble lending. This is lending based on data. Is going to be enormous. Okay.
Well, but this is crucially dependent on the rate at which UPI payments are made on the UPI, or by the payment bank.
No. Payments is just one aspect. Your mobile phone activity anyway is there. Today, many people...
Payment on the mobile phone, right?
So that's one, that would be great. But I'm saying when bill payments come, bill payment data will be there. When GSTN comes, GSTN data will be there. When electronic tolling comes, toll data will be there. So in the next 2-3 years, all these mega systems are going to go online. So each of them is going to create a digital trail. And it's up to individuals and businesses to harness their own data trail to get credit from the system.
But what do you give it? 5 years before we see an exponential growth?
You have to ask your friends here. I'm sure if, I'm sure Vaidi, kuch karo yaar. I'm sure Raji will do it. SBI once, SBI gets going, you can't stop them. So SBI will do it. So I think we have some very big, very powerful organizations in this room and in the country. And they just have to make up their minds. Okay. Now, and I think the point that, Amit was making, I think once you are comfortable that you have a frictionless experience, then you can press the accelerator. Okay. So you still have to, so right now, many of these things are at the point where people are kicking the tires and, they're finding issues and all. So that's all teething troubles. Okay. But once in a few months, the teething trouble is out of the way, your frictionless payments, just watch.
Okay. Well, there are a lot of questions on whether transactions can be done with OTP, with the one-time password, rather than with the biometric, because the biometric will still need...
No, OTP is for the phone. It's PIN.
Yes.
Phone plus PIN.
Okay. I'll come to the hassles that bankers may face and the questions they will face. But Amit, how much are you able to coax banks, or how much are banks forthcoming in giving loans to your customers first? I will come to the suppliers in a minute. Are you seeing seamless or near seamless loans being given to your customers by banks?
So again, this is very early, right? If you look at the customers, we have consumers, we have sellers, and on both sides, we are partnering with banks to figure out how credit can be given. And over time, as some of these innovations become more mainstream, it should become paperless. So on the consumer side, you see a lot of EMIs for existing customers. You see there are institutions that give even to new customers.
Existing customers of yours or existing customers
of the bank? These are pre-approved customers of the bank who can get loans right at the time they're doing transaction. EMI is a payment method. So there is innovation that is happening on the pay later side. And different banks are doing different kinds of things. Plus there are institutions, there are NBFC organizations that are also building stuff. If you look on the seller side, again, there's a lot of digital trail that sellers are leaving that didn't exist before. A seller that was running a corner shop that served only a 5-kilometer radius is now selling not just nationally, but also selling globally. Yeah. We have 16,000 sellers who are on Amazon.com from India. So you have so much data, you know how much inventory they have, you know how many inventory turns they have, you know what their working capital situation is, you know what the order defect rate is, you know how many times they have defaulted, you know how many chargebacks have been filed. As all of this data is exchanged with a bank or financial institution in a safe manner that adheres to the consent of the seller, the ability for a financial institution to use that and give loans that have very high adoption rate
numbers
goes high.
Just some numbers. What percentage of your customers, of your buyers, are being financed by banks, and what percentage of your suppliers are being financed by banks?
I think it would be small. It's not something worth mentioning because it's very early. But it's a trend that's only going to increase.
Is there a substantial improvement compared to year-ago levels?
Oh, absolutely. I mean, year-ago levels, we didn't have the ability for buyers to get loans. I mean, Amazon has just been around for 3 years, so every quarter is like a year for us. On the seller side, if I look at Amazon globally, Amazon.com, we probably have a near paperless way for sellers to get loans. We actually issue loans ourselves. We don't do that in India. And using sellers' data, we are in a position to issue microloans near paperless over there. So India is different, and partnering with banks to make it happen is something that we've been doing. We've been doing for a year. These numbers are meaningful, but not that big that we would boast about.
In your estimate, how long will it take to make transactions paperless, loans through paperless transactions in India?
I think a lot of these innovations that are being discussed would be very important, because at the end of the day, even the loans that are given, they are approved, but then there is a manual loop that tries to get the wet signature and the other documents. So I think a lot of the innovation that is being talked about here, my take is very simple, that if you remove friction from the system, all the stakeholders in the system will jump on it. So a lot of the stuff that's happening, and I'm keen to listen in, all the plans that are there, the flywheel moves very fast.
Can you point out the frictions that you sense already from your customers or from your suppliers?
Well, I think the simplest of them is the act of paying online. I mean, when you buy a product, the act of paying, if you compare the friction that is there to pay for the product in a typical transaction in India versus more developed economies, there's the OTP, there's a two-factor authentication, and a lot can be done using data, using insights, even working through the flows of removing the hops. And as payment methods like UPI and these platforms become available, it's an incredible platform. I was just telling Nandan that even developed geographies don't have such a layer that brings together all the ecosystem players in a public way. A lot of these innovations don't work when they try to do proprietary. So when it comes in a public way, something that would remove a real friction.
No, if I am buying from home, I don't have a problem with two-factor authentication or OTP because it happens in seconds. What I'm asking you is, what are the frictions or obstructions, hurdles you see in bank finance for your customers?
Well, I would disagree. I would say that removing 10 seconds is like a huge conversion. I can give you separate data on saying, I think we would be twice our size if we could remove some of that
two-factor
friction.
authentication.
Yes. So I just feel that we underestimate human patience for slow screens. Humans don't tolerate latency a lot well. I mean, try to remove 7 seconds out of a process and you'll see what happens. I think we should put a very, very high bar. The friction should add customer value. If it does not, it's something that we know that conversion goes up. So while you might be patient, I'm sure you will shop a lot more on Amazon if I remove that friction.
Okay. Well, perhaps I do shop a lot on Amazon and on the net. Yesterday I sent a bouquet to my nephew, and well, it took me about probably 15 minutes to finish the process, so I can imagine the impatience. But the bouquet was delivered in 15 minutes. So the human effort at the other end was so rapid that it matched the internet speed. And I can understand, therefore, if that was rapid, perhaps I would send a lot more bouquets. Well, our experts are open to questions. Adil, I thought you had a lot of questions on how do you make it paperless, biometric versus OTP? If someone can reach him a mic. It's just come.
So my question is on the fact that there's so many elements to delivering paperless, and Amit had brought up reducing friction being so important. Do you feel that the offline leg in banking, insurance, mutual fund, is that the friction point that's blocking that exponential growth that e-commerce has seen?
No, so I think the friction that I was talking about was just payments, and that's just an example of friction. I mean, if you take a seller and a seller is selling out, and you send a nudge to the seller saying that, look, at your velocity, you would need to add more inventory to the warehouse so that you can continue to sell. And if the only blocker is working capital, then that friction in trying to get that working capital on the tap is a huge friction that would determine a lost sale or one sale. A great example I can point you to is AWS, Amazon Web Services. Securing a machine used to require a human process. What AWS did was to make it self-service and literally allow you to scale up and down without asking anyone. And look at the amount of innovation, look at the amount of startups that have started that now can safely scale up and down. So I'm just giving examples of friction that are seen in e-commerce, but I think in general, if you remove friction, you'll see a lot more adoption. It's a lot more convenience. Convenience is one of the three pillars that all customer experiences depend upon, and I don't think so financial products are any different.
Well, there is a question coming. Before the mic goes over there, let me squeeze in a question, Nandan. The payment banks were expected to be a very easy way in which the smartphone will become an instrument through which payments will be made, and therefore you will get financial profiles of people. Now, it looks like because of the forbidding cost of spectrum and this huge competition that has come from RelGeo leading to undercutting, the payment banks have gone into a back burner. Nobody is telling us when the first payment bank is going to be launched. Does that push back financial inclusion somewhat?
No, I think...
if the payment banks don't come in time?
No, I think it's true that a lot of people gave up their licenses. I think 3 people have given up the licenses out of the original 11, and we have 8. But I definitely see at least 5 of them are very focused on this. And they will come, Paytm, Reliance Bank, the 3 telcos, and the others. So I think it's better. And, I think it's all, it's not that we need the payment banks for this to happen. Incumbent banks can also aggressively use this technology and roll it out. So, it's just that there are many things in the strategy of rollout. Payment banks is one thing, but I'm sure our existing friends here can roll it out in a big way too.
Okay. Yes, there was a question there.
Yeah.
If you can introduce yourself, yes.
Yeah, my name is Abhishek Rathi. I represent PNB MetLife. My question is to Mr. Nandan Nilekani. Amit mentioned about friction, and friction is also to do with remembering your Aadhaar number. Now, I have an Aadhaar since last 3-4 years, but if you ask me my Aadhaar number, I don't remember it. When we have mobile number as very joined with the Aadhaar, why can't we make them interoperable? So that's one part of the question.
So what do you mean by Aadhaar number is, you can store your Aadhaar number in the mobile, mobile number in the Aadhaar database.
Yeah, so if Aadhaar authentication is required in any platform, why don't mobile number be sufficient enough to actually authenticate your Aadhaar?
So anyway, I don't want to get into design issues, but there are reasons why there are challenges. But anyway, Aadhaar authentication should be quite straightforward. Today, for example, Reliance Jio is made a blanket offer. You come in with your Aadhaar number and you can get a connection in 15 minutes. Whereas if you go with paper-based approach, it takes you 1 week. And they have signed up 22 million customers. So clearly, something is happening out there. If you put your full marketing muscle behind using these things, they will take off in a big way.
Yeah. Second question is around this entire fact about security and how biometric is required, as a second factor apart from OTP. Can we look at speech recognition or speech biometric as one of the ways? Because you could actually serve India through biometric, but not Bharat. And possibly speech recognition, could serve, do voice biometric for Bharat as well.
No, I think, see, if you go back and look at when we took the design decision in 2009, we looked at all possible biometrics, including speech. And we did a very, very detailed analysis. And finally, we selected fingerprint and iris. Fingerprint because that was already ubiquitous. Iris because the iris patents were coming out and we knew technology prices would fall. And iris reliability was very high. With voice, there are issues. Ambient sound is a big issue for voice because in a noisy place, you can't. And there are many issues that finally we took the design call that we'll do with fingerprint and iris. Now, somebody can build a voice-based layer on top of this, but that will be specific to an institution. It won't be in the Aadhaar database.
A slightly tangential question. Because of the high cost of spectrum and the as yet poor availability of electricity, do you think this whole process of frictionless experience could get postponed.
No, nothing.
At some point, either the spectrum gives way or electricity gives way. No.
You're worrying like, thought it'll happen.
Okay. No, I'm glad if it happens.
Why are you worrying about some electricity, some spectrum and all that? It is, what is happening is inevitable. I mean, Amit said, what, 90% of the PIN codes, Amit?
Yeah, 90%.
I mean, 90% of the PIN codes in India made an online purchase on Amazon. Now, what does that tell you? That 90% of the PIN codes have smartphones, have power, and have connectivity. So that's what it takes. And I think tomorrow, for example, TRA is now coming into the policy on shared Wi-Fi. Imagine if people invest and create 1 million Wi-Fi hotspots. Then you'll go to a Wi-Fi hotspot. So all those things will happen.
No, I want it as much to succeed. I want it to succeed even more than perhaps you want. But I'm sure all those 90% transactions happened from home where you could retry. Whereas if you go to a merchant outlet and you wanted to purchase something and you wanted a bank loan immediately, then there are so many hops would that be postponed by a few years?
No. Everything that we're talking about will happen in the next 36 months.
Okay, that's still 3 years. Well,
3
that's
years?
Very
You've been
encouraging.
independent for 70 years or something.
Yes, sir. Mr. Hota. Okay. Mr. Hota, if you can reach a mic here, please. Mr. Hota, actually, you will be the butt of many questions, but your question. No, please, the mic has come. Here.
My request to Nandan Nilekani to share his views on CERSAI initiative.
You want to get me into trouble, is it?
No, actually, trouble is the CERSAI itself. The reference is to a November 2015 central requirement that you need a separate 15-digit number for authentication.
No, I think the thing what happened was the whole CERSAI and the central KYC registry was a parallel thing going on in Ministry of Finance or something, and it suddenly popped out. And I think clearly there is work to be done in aligning that with the digital infrastructure we are creating. But I know for a fact that people in government have noticed that this should be, the central KYC registry should be fully digitally compatible. And there already submissions are happening. There's a committee looking at it. I'm quite confident that it's just a matter of time, once the wheels of bureaucracies move, that this will get sorted out.
But is it needed at all?
Who am I to say whether it's needed or not?
No, Nandan, if you are convinced that a separate authentication is not needed, then it is easy to argue with the government.
No, see, I think I don't want to get into an argument saying you don't need CERSAI. That's not the way to deal with the system. Having worked in the system for 5 years, I know what to say and not to say. So I'm not going to say get that out of the way because that's not feasible. However, we can say please amend CERSAI to accept digitally signed records, and that will happen. And once that happens, we are home.
Okay. Is that all, Mr. Hota? You think? Okay. All right. So the opinion has come from, or the request has come from Nandan Nilekani. I doubt it will be set aside. Certainly. Yeah, Mr. Vaidyanathan.
You see, in India, sourcing on the net digitally has already happened. I think at least the platform has been laid, net is there, mobile is there, many banks are doing it. Credit decisioning through algorithmic credit decisioning, and Lata, you had a specific session with me once on your channel, is very much on. There's so many new fintech startups, they've all come, and it's happening in a big way. We are doing it at Capital First, it's all happening. The documentation part can also move, technically can happen on the net, and customer could do an e-sign, we could sign, we could move on. But some of the e-sign is really not taken off in India, and therefore the judiciary is still not clued on to this whole concept of e.
Where is judiciary coming here?
No, in the sense that, you got to legally be able to...
E-sign is a legal signature under the IT Act.
No, I know
so
that.
Where is the question of judiciary?
No. E-sign is certainly I'm saying just adoption has not happened in a big way.
E-sign was launched in 2014, and we had only 2-3 providers like e-Mudra and all that. As of now, India has already done 1 million e-signs by 800,000 unique users. So it just, these things, pick-up takes time.
So, this is more to Lata's comment as to what's holding up. Actually, that once we cross the hump on e-sign, I agree that it's come up, and I know that service providers, it's beginning to move, and the number you mentioned is quite impressive. Once we crack that part of the puzzle, then you will actually be able to give out the loan, take it back, and be able to enforce it in the court of law if there's a default happens.
Sure.
And if that's the only
Well,
one
I think
stumbling block
it's
today.
now for the users to adopt it.
Yes, that's right. Yeah.
It is available. 1 billion people have Aadhaar numbers. You have at least 3 providers of e-sign. RBI has clarified that it's a digital signature is all right. It's now users. All of you have to adopt it. Rajiv has to adopt it. Rajiv, kar hai ki nahi? Huh?
Well, I think, why don't we call the users on stage? Nandan, you don't have, I mean, we would be very happy if you stayed on, because my sense is that all the users will have more questions for
I
you.
know every one of them personally. I meet them. I sit with them. So don't worry, I'm very connected to this crowd.
So that you will be, because there will be doubts on an online basis, but on an ongoing basis.
Yeah, ongoing
but for the moment, if you can stay on with us, there will be questions from the users as well.
Anyway, I'll be there.
Okay. All right. Thank you very much, Nandan, for joining us. A round of applause. A round of applause for Amit as well, but we're not letting him go, because we will have more questions from the users of digital finance. Thank you very much, Nandan, for joining us. Do stay on as the users of digital finance, the banks, come on to the dais. Over to you, Aditi.
Thank you, Mr. Nilekani, for joining us today. And after that interactive session, it's time to begin with the first panel discussion of the day. And joining us on the panel, we have Mr. Amit Agarwal, Mr. Adil Shetty, Rajiv Anand, Executive Director, Retail Banking, Axis Bank, Zareen Daruwala, CEO, Standard Chartered Bank, Rajneesh Kumar, Managing Director, SBI, AP Hota, CEO and MD, NCPI, and Arvind Kapil, Country Head, Unsecured Loans, Homes and Mortgage Loans at HDFC Bank. Please give them a hand.
No, you can sit any which way, please. You just have to hold the mic. I must say that's a fairly quick turnaround of the scene. Let me just introduce yet again, that's Mr. AP Hota of NPCIL, Mr. Rajiv Anand of Axis Bank, Mr. Rajneesh Kumar of State Bank of India, Amit we don't know, Zareen Daruwala of Standard Chartered, Arvind of HDFC, and of course Adil Shetty of BankBazaar. Gentlemen and lady, thank you very much for joining us. Well, let me start with Mr. Hota. Mr. Hota, taking on from where Nandan left us, clearly the payment banks are going to take a little while before they come on and we get a large amount of financial footprints, digital footprints from the payment banks. So a lot hinges on the UPI coming on board and we buying every bouquet and every cell phone and probably home loan products on the UPI. What's your sense of how quickly it will scale up?
As in today, already 24 banks are live. 17 banks have placed their app on the App Store. It is available. 2 large banks, State Bank of India and HDFC Bank, would be going live by end of this month. We have already got 1.4 million customers who have registered and who have started transacting. And we have got about 6,000 transactions a day, and now we have clearly recognized what are the pain points. We see a little bit of a decline, partly because, you know, they are a little confused between M-PIN and the UPI PIN. So now we are nomenclature that PIN that we are doing. So the teething troubles, we are in that phase. Once State Bank and HDFC Bank comes, and quite a 7 or 8 banks are in the pipeline by end of this month, then we would start the publicity campaign and we would reach out. Good thing is, all this publicity campaign or all this talk about UPI has helped the base product, which is the IMPS. IMPS is the real-time money transfer from one account to another 24/7. In fact, that IMPS has zoomed almost double from 1.2 million to 2 million transactions a day. So the things are happening pretty quickly. And now the basics of UPI, the banking system is quite familiar. We all should be happy that this is one of the products which has been built in a collaborative way by the banking systems. Nowhere in the world such a collaborative approach has happened. It has really got two-factor authentication with a single-factor experience. The wallet kind of experience that the people had earlier with Paytm and Oxycash, now with the bank customers can have the experience. So the experience of paying in remittance, in the e-commerce space, it is happening. One merchant that has really taken in a big way of 1.2 million customers. 50% of the customers have been onboarded by one merchant. Really, I would not hesitate to name that. The PhonePe really has really onboarded their customer. Once possibly Amazon comes, really, I suppose it will be a breakthrough. I suppose we are waiting for that, a few more such big players to come and make a breakthrough. So remittance has become simpler. We are working for UPI 2.0, that is in March 2017, whereby all the bill payments would also get integrated. So remittance, bill payment, the collection by the e-commerce players, and a whole lot of really use cases would come up. And I feel that UPI would really be a game changer, and it is our initial results have been quite positive.
Okay, what would Amit need to adopt UPI? I didn't get what exactly you want from him.
He wants something really that we are dealing with the banking system. In fact, because Amazon would like to really have its own branding in the, like I would like to really pay. As AP Hota at UBI, Union Bank. AP Hota at Union Bank is my virtual address. So if what Amazon wants is AP Hota at Amazon should be okay. So the banking system has to adjust to the idea of a non-bank participant coming and having the branding. So that particular issue, I think it will get sorted out. Well, we'll
Amit,
do it very
your
quickly.
thoughts, how quickly will your customers be accessing through the UPI?
I think the more important point is that it's a very unique, revolutionary payment platform that has been built in a collaborative way, as pointed out. It's something that has not been done anywhere, and it removes friction. And I think we all need to be just patient, because anytime, as I said, you remove friction, people use more of it. You want to make sure that the stakeholders are aligned so that it's a win-win-win for everybody. Some of these things take time, because there are things that need to be, there is the platform needs to stabilize, and there are the stakeholders that need to align so that it's a win-win.
If all the banks are on UPI, then it will be only a matter of time before.
I think we look at all of these decisions as what does it mean for our customers. If it makes sense for our customers in terms of the payment experience, if it makes if it makes their experience better, and if it strategically aligns with what we want to achieve, then there's no reason why we would not.
How many transactions have happened on the UPI? We do IMPS, of course, we all use.
The transactions about 6,000 a day.
Fine.
But there are some pain points, particularly MPN issues. Quite a few things we are sorting out in the next couple of months' time.
Okay.
And experience should be pretty good. In fact, we are big players, as I said, State Bank and HDFC Bank. And State Bank today, I was really amazed to hear their customer base after merger will be 450 million.
Of course.
So if a certain percentage comes, you can imagine the kind of things that can happen.
Well,
so big players joining is very, very important for us.
Okay, from UPI, let's come to paperless transactions that banks are able to put through. Rajiv, first, your experience. I will come to the bigger experience in a minute. Let's first get the retail experience that Axis Bank has had. Is it possible to disburse loans practically paperlessly?
I think we spoke about sort of many experiences. For example, for our existing customers, pre-approved customers, for them to get instant loans on the mobile phone, I think has been available for quite some time. But one of the experience that I want to talk about is really, from a financial inclusion perspective, we are actually working with a BC. And really, cycle rickshaw guys and auto drivers, they remit money to their rural, to their parents or whatever. They also make small purchases, train tickets, recharge, and so on and so forth. They're using that data to be able to assess the incomes of these fellows.
Okay.
And they're using that data to be able to underwrite these guys, typically for anything between 7,500 to 15,000 rupees. Okay. So this is all data driven. We are then authenticating them through Aadhaar, biometric authentication, which is a tablet-based application that we have created. So the whole process is paperless. And then we issue them a debit card typically. And then the customer can go to an ATM and withdraw money or send it to his parents or whatever it is. So that entire process here, the use of mobile, the use of data, and the use of biometric authentication makes this whole process at that level of financial inclusion paperless already.
Okay. Is this a push product or is it a pull product? Is the retail, the guy who is charging the phone and remitting money, coming and asking you for the product, or are you selling him the debit card?
We're selling him the loan.
Okay.
We're not selling the debit card.
It's a product that you are pushing.
Well, see, ultimately, all these people have inconsistent incomes, right? But they do have incomes. So therefore, there is a need for this loan. I mean, I think it's...
No, I take your point. I'm only asking whether it has become popular enough for the customer himself to come and ask you for the
loan. Still early days. We are in pilot mode, and we've rolled it out in some of the cities, and we want to learn. And typically on the lending side, the whole process of rollout is slow and steady, for obvious reasons. So therefore, but the experience so far, has been very good.
Mr. Rajnish Kumar, before I come to HDFC Bank, where a lot of loans are being given, in microseconds and paperlessly, let me come to a slightly higher ticket loan. For instance, for an Amazon supplier, to what extent are you able to give loans for such people without resorting to paper or even without a wet signature?
So, there are two questions. One is, you talked about Amazon. It's a
Amazon
question like
supplier.
Yeah. So there we already have arrangement with many aggregators, what we call, and it could be a Snapdeal or a Flipkart or a Ola, Uber, and there are aggregators who does aggregation for trucks. So we have entered into agreement with many of these aggregators and their vendors. There are two dimensions to it. One is the vendor and one is their customers. So as far as vendors are concerned, we are able to process and give the loans or approve the loans within a few minutes. But still, the documentation part where we need a loan documentation is still, it is in the physical form. And where the choice is with the vendor, he comes to one of the identified branch or a point and executes the document. Or we provide the facility, one of my officer will go and get the signature. So that is the process, and we are doing it in a big way, and that is the way forward. And it requires collaboration between the partners. Okay. And as far as, again, the personal loans are concerned, so same thing, but it is as of now for the existing customers of the bank with a debit card, where we have a pre-approved loan, and if a customer is buying on an e-commerce site and wherever we have an arrangement with the aggregator, it is possible to disburse the personal loan immediately, and it is totally paperless.
Okay. What is the hassle for the suppliers of an Amazon or for the vendors to get loans without any resorting to paper documents?
So that is the only.
Is it because of the due diligence problem?
It is not a question of due diligence. It is a question of clarity on the law. Although there is an IT Act of 2000 which got amended in 2008, but as Mr. Nilekani was mentioning, that even the digital signatures or electronic signatures, only about 800,000 or 1 million people have. And affixing the digital signatures also is not a very easy process. I keep on affixing my digital signatures. But we are not sure about, like somebody says, I accept the terms and conditions of this loan, and it is a valid contract in the eyes of law or not.
Okay.
But when somebody is taking a loan, there has to be a contract. And these are business loans. When it is a personal loan and where the owner, the borrower has a debit card, and we have structured the process in such a manner that legally we are covered as far as that contract is concerned.
Okay. So your worry is that if there is a default, you may not have control legally in case of a paperless transaction.
Enforceability of contract could become an issue. So that is the reason why still we need physical paper.
Okay. Arvind, or is it Kapil Arvind? Arvind Kapil, what is the experience in HDFC? Is it, you don't have worries about enforceability in a paperless loan?
You know HDFC Bank, right? The first thing is everything has to be rock solid before we start lending. So let me give you a perspective on what we do. We started this initiative of what we call as 10 seconds paperless loans. So I believe that we started this paperless loan journey. So we could be almost the paradigm pioneers.
What is the limit of this
You
10-second
can go
paperless
up to 15 lakhs. You can go down 1 lakh to 50. So it's not small. It depends on individual credibility. So to probably explain to you what the product is, you can go online on net banking, you can go onto your ATM, and you can go onto your mobile. And if you're banking with HDFC Bank, and if you've been there for over a year, and if I have adequate visibility of your transactions as an internal customer, you can actually go 24 hours by 7, at a click, you'll get money transferred to your account. So it's no more just approval, you will have approval plus dispersal. And it's paperless, so there's absolutely no physical. I mean, like Amit said, frictionless. I think on the lending side, we believe we probably have reached a certain point of arrival. From there, we go to take it further.
But these are for existing customers with how many years of history?
No, it depends on minimum a year, and it depends on multiple transactions. So he could be a
how many
credit card
transactions?
user, he could be a debit card user, he could be shopping, he could be an active customer. So if he's a primary banker with me, I could actually look at him even earlier than a year.
Okay.
So I think more important is not about just the years.
But the number of transactions.
Yes. And of course, the external bureaus support the existing customers. Having said that, I'd like to share 2-3 insights which could be valuable. One is, we clearly see that the convenience element, which a lot of panelists spoke here, is completely redefining the way customers behaving. And I'd like to quantify this with another 2 statements. 45% of the transactions that are happening on these loans are not during banking hours. And bulk of them are happening between 5 a.m. and 9 a.m. in the morning. So there's reason for businesses to relook at how customers are probably looking at things now. And maybe it's going through a change. At least one has to keep an eye on the ball there. Second, 60% of these transactions, we offer these loans to 1,500 cities.
Yeah.
1,500 locations, sorry. So we run it on fairly high scale. As a matter of fact, we're very nearly reaching 1/5 of my business. So this is not a fragmented pilot stage that we're talking about.
Okay.
We're talking about fair amount of scale. We haven't given a single ad. We don't even give ads on this product.
Okay.
But it's running because customers finding it convenient.
Okay.
And 60% of this business is outside of the top 7 to 8 cities. So this belief that, most
That
of
it is
the
a tier 1 product? No.
active net users could be in these cities. Its bulk of it is outside.
That's a revelation. Yeah, all the net transactions I have done have been either before 6 a.m. in the morning or after 10 p.m. in the night. So I can imagine that transactions will happen then. Well, before I come to Adil to give us the final problems that could encounter, that a customer could encounter, Zareen, you stand at a confluence or at the point at which you're able to see the international experience as well as the Indian experience. What is your sense in terms of your being able to provide services to non-Stand Chart customers?
So Lata, we in 2012 had launched a product way back then called Approval in Principle, where we actually gave credit card limits to new to bank also. Yes. The only thing then, since we don't have the income proof, we would give him a predefined limit, and then we would validate once he gives the income proof, and then it sort of translates into final limit.
Okay.
So that is already
You did that on the basis of CIBIL records?
Yeah, CIBIL and many other, seeing his digital footprint. So that was done way back then. Of course, we've not extended it to personal loans, but it was done for credit cards. So we've been doing that. Having said that, I think India, given the UPI development, to my mind, it's something we are quite ahead, even when compared to advanced countries like Singapore. Singapore government is now looking at, 1 year later, I think a UPI kind of model is what they're looking at putting in Singapore. So to that extent, I think India is quite advanced. And in fact, Mr. Hota, I think, has been modest. To my mind, the kind of applications that one can see of UPI is going to be mind-boggling. In fact, when he talked of, UPI too, even simple things like SIP, etc., you can do many, many transactions which are, it's not only enabling the Amazons of the world to do, if a Blue Dart goes and delivers a package, they can, instead of cash, do UPI. So there are many, many, many applications.
Okay. Well, Naveen, before I ask our panelists for what problems they see in paperless transactions, what do you see as roadblocks for further paperless transactions?
So what we believe is that, one, the banks have done an excellent job of delivering paperless to existing bank customers. I think that frictionless experience of 10 seconds is world-class. It's amazing. Now, today the beauty is, I think, like Mr. Nandan Nilekani said, the Evidence Act and the IT Act allow for e-sign. And to what Amit had said earlier, the technology is available today where for a new-to-bank customer, and we have 10 million visitors like that on BankBazaar every month, there is the opportunity to offer a frictionless experience.
10 million customers who are new to bank.
Visitors, no, 10 million visitors a month. So my point is simply that I think a combination of the fact that regulations are actually changing. We have, Mr. Sathe, a regulator over here, that regulators are encouraging paperless, right? The regulations, the Evidence Act have changed, and technology allows us to give a seamless experience on the mobile. Genuinely, if you look at it today, we're able to issue fixed deposits, debit cards, credit cards on the mobile phone. I think we're at an inflection point wherein if we can make use of these regulatory encouragement and the fact that technology provides for it, it's a free run here as far as paperless growth goes.
Okay. Well, actually, since we've taken a lot of time, let me do one thing. Let me thank all of you for your presentation, but we won't still let you go free. Questions will be after we hear the non-bank financial experts as well, and then we'll take more questions for you all as well. Thank you very much, Naveen, Arvind, Zareen, Amit, Mr. Rajneesh Kumar, Rajiv, and Mr. Hota. Thank you very much, but not yet free to go. Thank you very much. Sure.
Well, thank you for that insightful discussion. Now with, yes, that's what I'm doing. Let this stage get clear.
Yeah, if you can invite the panelists.
Sure. So, with increasing digital interaction amongst consumers, India is at the cusp of converting to digital finance. Online transactions, mobile banking, banking apps have been on an upswing. So to discuss this in detail, we would like to have the second panel discussion, and the members of the panel are, I would like to invite Bhargav Das Gupta, MD and CEO, ICICI Lombard, Sandeep Sikka, President and CEO, Reliance Mutual Funds, Nilesh Sathe, Member Life IRDA, and Mr. Parag Mathur, General Counsel and Head of Compliance at BankBazaar. Please give them a hand.
Well, actually, if you don't mind, Mr. Hota, why don't I invite you back again onto the dais? Because my sense is that there will be a lot of questions for you, considering that it will be on your payment system that a lot of these transactions will also happen. Thank you very much for joining us, Mr. Hota. Mr. Bhargav Dasgupta, Mr. Sathe, and Parag. Let me first start off by asking Mr. Sathe, who is the only member from the regulatory side who is with us. Are the regulators now, on board to allow completely paperless transactions in financial products? We're not talking about e-commerce, financial products.
Yeah. Lata, first of all, let me tell you that unless the regulators allow this, things cannot move forward. And since the things have moved forward, I think regulators do understand the need for it, and they have taken steps to see that paperless transactions keep on increasing. Platforms may be different, platforms may not be developed as of now, but going forward, I'm sure all the regulators are in unanimity to say that the paperless transactions in case of financial transactions should increase. And to give you an example of, making use of e-transactions in insurance, if I give some numbers, you'll be surprised that the web aggregators who have been marketing insurance policies through net, online, there has been phenomenal increase in number of transactions that have been happening through web aggregators and online purchase. In case of non-life, take example of health insurance or motor insurance, third party, you'll be surprised to know that a host of transactions that are happening through the e-platform are increasing by leaps and bounds. And regulators have ensured, what we have done is we have asked the insurers to have QR code on each non-life policy, so that through scanning, it can be checked whether this is a genuine policy or a fake policy. So you don't have to contact office to find that. It can be instantly checked even by some policeman who will stop the vehicle and say, show me your policy. And through QR code scanning, he will be in a position to connect it to the database of the insurance company and find the genuineness of the policy.
Okay. What about the customers, sir? Will they, could they be misled by people selling wrong products?
I don't think, on the contrary, online transactions, in my opinion, are more authentic, because you have got ample time to have scrutiny of what is being shared there. You don't have to jump to a conclusion that the agent is saying, please sign, or something of that sort. You take your own time, and the possibility of missell in case of online transaction, in my opinion, is much less than what offline transaction can have.
Okay. Well, if a regulator can have that much comfort, then I'm sure customers will find that very encouraging. Mr. Dasgupta, what has been ICICI's experience in terms of being able to sell products practically paperlessly? Do you have entirely paperless transactions?
We've had for some time. One of the big advantages that we've had in the general insurance side is for policies below a certain threshold, we don't necessarily need customer KYC. And that's obviously a big advantage.
So this is for car and health insurance? Even
health insurance up to a certain ticket size. So if you look at some of the innovation that we've seen in the market, specifically from our perspective, we have a mobile app on which you can take a photograph of your previous policy, which need not be from ICICI Lombard, it can be from any company. We will, on that photograph, we will send you a quote. You can just click that quote if you like that, and you can go into a payment page and you can pay. Entirely paperless. Not only is it entirely paperless, it's just so convenient, you just have to take a photograph. If you look at the way we've been working with the ecosystem, I think in the previous panel there was a lot of discussion about working with e-commerce players. That's been a big driver for general insurance adoption in some of the smaller ticket size policies. A classic example is the recent IRCTC example. Today, on the IRCTC side, we are selling, not we, the industry is selling about 3.6 lakh policies a day. And this is 92 paisa, remember that. Imagine, doing a policy at 92 paisa, obviously there can be no cost really, almost. And that's how it's been designed, entirely paperless, entirely straight through. and it's working at that scale, and the adoption rate on that side is about 40%. It's happening because it's entirely paperless.
Adoption is 40%. Payout?
As in, payout will depend on an accident happening.
Okay. But
hopefully it doesn't
the
happen.
experience is...
absolutely seamless.
From the customer's angle as
These are just
well.
some of the examples. I mean, there are many such examples in terms of general insurance.
Okay, let me go to the third party then. BankBazaar. In the process of selling insurance products, I won't come to mutual funds. I guess there the experience is relatively easy. But in terms of insurance products, do you find paperlessness entirely possible? Is it entirely a paperless transaction, or is it at some point that insurance guys want a wet signature?
So first of all, the insurance regulator, as Mr. Satya said, the regulations are a lot clearer than a couple of other regulators I don't want to name, but it's very obvious that the step forward towards paperless is that the frictionless customer experience, the allowing the partners to adopt technology, and of course, allowing the Aadhaar-based platform, which Mr. Nandan Nilekani also spoke of, and utilizing the eKYC, e-Aadhaar services, and e-sign. And we really see that this is taking off in a big way in insurance, and in the web aggregation platform, which itself is an online platform for online policies, is a very advanced step in this direction. Rather, 3 or 4 years back, DMAT of insurance policies was also one such initiative from the IRDAI. So I really see, and from 1st of October, rather, the regulations have further clarified that for certain disaster-prone areas, all motor policies, health insurance policies below a particular threshold of premium and cover have to be compulsorily on an online mode.
Okay.
This will clearly this is a push from the regulator side. At the same time, there's a customer demand for such products. On the platform of Aadhaar and this enabling ecosystem, I really see this taking off.
Okay, Parag, which is the product that sells most? Is it personal loan? Is it insurance? Is it life insurance? Is it health insurance? Car insurance? Or if I'm leaving out something, which is the product that sells maximum?
So, car insurance sells the best, followed by, I think, term life is catching up.
Okay.
So these two are the topmost. Health, vanilla products sell, but there is a human intervention required for pre-medical, positioning and declarations. That leads to underwriting taking a final call after maybe a visit or after uploading certain medical documents. So that's a little bit of friction in that particular area.
Okay. I would be more, looking at it as a customer. Now, as a customer, perhaps in a location where you don't have a brick-and-mortar office, where, let me assume, I say, although being the largest network, may not have a brick-and-mortar office. What is the experience of the customer or the guarantee that the customer will get the payout? Whom does he cling to if the payout doesn't come in the adequate amount and in the inadequate time? I mean, are these hassles that you see?
So there are 2 points I would like to make here. One, an online customer is owned by the insurer himself. And the regulations are very clear and onerous on, putting a very robust grievance mechanism system, an escalation process, an e-claim process as well online. And this is live monitored by IRDA as well through an integrated system. So things going wrong on a complaint side, yes, there could be delays. But on the processing side, I don't think that the insurers can shy away from the responsibility of paying up online claims, because these products are simpler, vanilla products. The claim process is also very simple.
Okay. I want to elaborate an experience, and I will say that without referring to the company. But receipt of the claim is not as easy as probably sale of the product. And I'll tell you why. I lost a relative, a very close relative, and I had to claim for her the term policy, life insurance policy. One of the insurers paid up in 27 days only on giving a attested copy of the death certificate. the private insurer, one of the private insurers, asked for the original, plus sent a third party to the doctor to check, whether enough previous record of illnesses was known to the doctor and not revealed to the insurer. And then the third party came over to the house of the relative and questioned the relatives to, whether any previous record of illness was hidden from the insurer. So how is this paperless?
So, there's a bit of a long answer to this, issue. I don't want to talk about term insurance, not my domain, but let me give you an explanation from the health side, very similar. If you look at an insurance policy contract, it's really, I'm getting a bit technical here, but you need to do that to explain this. It's basically pooling of risk, right? 100 people come together of similar risk profile, and effectively the pool gets supported by, someone who's falling sick is being paid for paid by the rest of the pool. Now, one of the things that insurance industry always has to be very, very vigilant on is any form of misrepresentation or any amount of wrongful claims. Now, we would all love to make it absolutely seamless and pay it out. Now, but the fact is, if you look at the statistic at a national level, the total incident rates of health in this country is about 3%. 3% of the population falls sick. If you look at the incidence rates for health insurance customers, it's about 7%. Okay. Why does it happen? It happens, in our belief, is because some people come into the pool who are basically unwell and coming into the pool, and the process of selection at times doesn't eliminate some of these people. Now, if the insurance company did not do the diligence at the time of claim, who would suffer? The set of people who've been honest and come into the pool giving full disclosures. For them, gradually the premium would go up. So it's important for the insurance company to look at the genuineness of this claim. Not to say that your person obviously was a genuine person, but this is a standard process that people set up. Having said that, it is also true that different companies set up different processes, and it's important for the customer to understand the quality of settlement and the service delivery aspect of insurance company. And again, I think Parag talked about a lot of the positive initiatives that the regulator has taken in this area. Even on the claim side, they've done a lot of work in terms of disclosure standards. Okay. So today, in every company's site, and I can talk from GI perspective, you can go and figure out which company settles how many of the claims within 30 days, 90 days, 180 days, 1 year, and that data is publicly available. So it's important for the consumers to be a bit more digitally savvy, go to the website and figure out who's doing what, and take some of those parameters in the decision-making process of selection of the insurance company beyond just premium.
Okay. Well,
one thing I would like to supplement what he has said. Probably many of you may not be aware that the Insurance Act, Section 45, has been amended now. What it is, I will just briefly tell you. No insurance company can call a claim in question after 3 years from the date of commencement. Earlier, that means what questions have been asked probably, if at all you have to say no to a claim, the claim must have been reported to you within 3 years from the date of commencement of the policy. If it is reported to you after 4 years or 5 years, you cannot, as per Act, you means an insurer, cannot call the policy in question. It must settle the claim. There is no choice. This has been amended very recently, and that is why insurance companies, as insurance is a contract of you bury my fida, as we say, of most good faith. So they want to check whatever you have declared is actually true or not. And then if they find that something which is materially important has not been disclosed, they have got every liberty to repudiate a claim, provided it is within 3 years from the date of commencement. If a claim arises thereafter, they have absolutely no right to repudiate a claim.
Okay. Well, if I can step in, it's a very interesting area, and I was listening to the talk that Nandan gave in terms of the lockers, digi-lockers. And one of the things that he talked about is the health records can also come into the digi-locker system, right? So imagine a future where everyone's health record electronically is available in the digi-locker. One of the big concerns on the health insurance side is pre-existing, right? Have you disclosed your pre-existing conditions? If you give access to that information to the health insurance company, there is no scope for denial of a claim on pre-existing, because we will know that there is an existing health insurance. So, it's not just for financial, usual payments and financial, credit and other banking products. This can actually transform the health insurance industry in terms of claim service once all of these, the entire India stack comes in.
Okay. Well, Parag, what has been your experience when you all sell insurance products? Do you have sufficient data that paperless products sold paperlessly, also have equal claim satisfaction? Or is it that customers want an agent or want a brick and mortar ally or presence to be able to buy an insurance product?
Well, I think both Amazon mentioned about the reach of mobile and net down to Tier 2, Tier 3 cities. Online buyers have an advantage to compare all the features, compare prices, do their, maths, change the equations within their selection to find out which product suits them the best, which is the cheapest, or which has the best cover. And I would say that the information available online is much more than what an agent would push and sell. And the chances of mis-selling online is very less, rather not existent. It's not dependent on what commission the physical agent was making, which sometimes is the reason for pushing that product or mis-selling. And I think a much informed decision taken online using eKYC as the base, which is, you can complete your application form online, you can sign it online, you can submit the KYC online, and if income proof is one of the requirements, that can also be pulled out and submitted along with the application.
According to then, what is the hitch in an exponential growth in...
No, Lata, let me tell you, there is no hitch at all. Okay. Actually, online buying of insurance has shown exponential growth already.
Okay.
Going forward, I'm sure this will definitely pick up very fast. And digital platform is not just a possibility, it is a reality today.
Without, is it entirely paperless?
Yes, it is entirely paperless.
And are you satisfied that the claim payout is satisfactory in these cases as well?
To be frank with you, the number of claims that have not arisen too huge in case of online, because it has just started.
It's a young product.
It's a young product. But we have got a robust system of grievance redressal mechanism set up by IRDA, through which we ensure that any complaint as far as claims is concerned is redressed within 15 days by the insurance companies.
Okay.
This is again online.
Okay.
I'd just like to add here. So you have one regulator who has a set of regulations which are clear. You have one regulator which is doing a pilot allowing OTP-based KYC for transactions less than 50,000. And you have one regulator which says biometric is must. The moment you have biometric introduced in the KYC concept, and please hear me out, it's not stage one at the entry level that you need to have biometric. You can have it in the entire customer's journey when he's researching, he's comparing, he's made an application, he's purchased the product. You can even do it after that. So why biometric being introduced in the middle in stage two, when that seamless process is getting interrupted by the person either having to go to a location or some sales executive bringing that biometric device and getting it authenticated, when the source of truth underlying that platform remains the same.
Okay.
Yeah. So what you see is that clarity in certain regulations will push the underwriters, the decision makers sitting here to change their internal minimum standards, look at their compliance policies, and take that step forward. Unless that step forward happens, the volumes will show differently in insurance, differently in mutual fund, differently in banking transactions.
So in your opinion, the regulators don't have to do anything further for pushing online products?
No, I think they need to do, especially the OTP versus biometric is a very big issue that I see. The central KYC registry which has been announced which was again mentioned by Nandan that it was parallelly happening, and it really pushes us back a decade with wet signatures, physical records, photograph with wet signature on it, physical submission of the document, and storing of physical records. So unless these things change and there's a clarity brought out by RBI, by SEBI, it'll, it'll still have little lower pickup than it's expected, because compliance, legal, underwriters always love to see things in black and white. And if there is an interpretation issue, there's always different minimum standards and risk appetite associated with each bank and its policies.
Oh, obviously, I would imagine, and Mr. Rajneesh Kumar eloquently puts that across. Mr. Ota, what is your vision in terms of when you can see an exponential growth of financial products on data given from the UPI?
I feel that a lot of really standardization is required. The banking system would have to be API driven. Why UPI is considered a game changer? Because within UPI as a product, we have brought out a few APIs. Means we have brought out the standard. The standard like, go and check with that bank whether with this mobile number there is an account holder. This is a question. Answer will come yes or no. Go and check whether this name is there. Fetch the name. These are the kind of really the questions. So similarly for digitization of payments and also the paperless finance. Somebody is there at the shopping mall, he wants to shop and immediately some finance has to be given. He is giving a consent that you give the data from the bank. Yes, data is available with the bank, but to get the data from the bank, some standardized APIs are necessary, so that it can be used across the industry. So the industry bodies would have to come together. They would have to agree on the standards, agree on questions. That is how it can happen. As far as the UPI is concerned, as I indicated in the earlier session also, it has just teething trouble. We have sorted out. We are pretty raring to go, and from 1.2 million customers, we are in fact aiming 25 million customers by March, and having a daily average transactions of 1 million.
Okay.
So we are confident of that. And with the e-mandate coming, for which RBI approval is on the way, because we are
e-mandate.
E-mandate. Okay. That means currently the mandate is totally paper-based. Somebody is given a wet signature. Now we have proposed to RBI that we would like to drive the payments on the basis of e-mandate. We wanted it for the ACH. ACH is agreed in principle, but the final approval is yet to come. Meanwhile, when UPI has come, so many users are quite gung-ho that let us really use this e-mandate for UPI. So if UPI now, as I can see, a lot of excitement on e-mandate. If that happens, it automates and a large number of, a great deal of straight-through processing happens.
Okay. Well, I think we are out of time for the moment. Aditi?
Yes. So thank you so much, Lata, and all the members of the panel for that insightful discussion. Now, to wrap up this evening, I would like to invite Mr. Naveen Chandani, Chief Business Development Officer, BankBazaar.com, for a vote of thanks. Thank you. You may take your seat.
Oh, no, I was in the impression we could take questions. I think they're out of time. Thank you very much.
Good evening, everyone. A very big thank you to all the speakers, the panelists, and Lata. I hope everyone over here enjoyed the discussions, enjoyed the views and visions laid out on paperless, frictionless. At BankBazaar, we believe buying a financial product should be paperless, should be frictionless. Here I see partners who have actually joined us in that journey. I think few steps have been taken in the right direction, both by the financial institutions, the regulator, and people like us in BankBazaar. Adil mentioned that 80% of all visitors to BankBazaar are new to bank. The way the experience is frictionless and paperless, specifically for existing bank customers, can we together make this partnership actually work for even the new to bank customers, make it completely seamless, paperless, frictionless? I would actually request everyone to, take this momentum. We are hoping to actually work with each of you to make this a reality. I just heard the regulator say in insurance it's already a reality. I believe it can be a reality even in the banking sector. With this, I take this opportunity to thank everyone for making time, spending time with us, being present here, and wishing you a very, very great Diwali. As I close, I would like to share a short video with you. Thank you.
This Diwali, celebrate friendship, celebrate love.
क्योंकि अब हर दिल की दिवाली होगी बोनस वाली.
So log on to bankbazaar.com and get amazing Diwali bonus offers.
Thank you, Mr. Chandani. Well, after that informative session on digitizing finance, the Digital Finance Conclave has come to an end, taking heed of the progressive stance on digital money that policymakers, banking institutions and consumers are building. The market for online finance in India certainly looks promising. I would also like to thank BankBazaar for taking the initiative of bringing digital finance to light. Once again, thank you everyone for joining us. Dinner is served. I invite you to join us for a meal. Thank you. Good night.
पापा मेरी दिवाली गिफ्ट ये लो बेटा.
इस दिवाली बिट्टू को गिफ्ट.
क्यों?
क्योंकि उसके पापा को दिवाली.
क्यों?
क्योंकि मूर्ति को दिवाली बोनस.
क्यों?
क्योंकि उनके बॉस ने अपना होम लोन बैंक
RBI that we would like to drive the payments on the basis of e-mandate. We wanted it for the ACH. ACH is agreed in principle, but the final approval is yet to come. Meanwhile, when UPI has come, so many users are quite gung-ho that let us really use this e-mandate for UPI. So if UPI now, as I can see, a lot of excitement on e-mandate. If that happens, it automates and a large number of, a great deal of straight-through processing happens.
Okay. Well, I think we are out of time for the moment. Aditi?
Yes. So thank you so much, Lata, and all the members of the panel for that insightful discussion. Now, to wrap up this evening, I would like to invite Mr. Naveen Chandani, Chief Business Development Officer.
You bought something for me. ₹1 चेंज में मिला था. वो कॉइन मैंने तुम्हें दे दिया था. तुम्हें याद है तुमने उस कॉइन से क्या खरीदा था?
कुछ नहीं.
ये वही कॉइन.
और आपने कहा था इसकी वैल्यू तब समझूंगा जब कमाने लगूंगा. अपना
चलो तो आई नई गाड़ी देखते हैं.
Just like your loved ones.